أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. So we'll continue our discussion of the substantive procedures in the auditing of the human resources, and we'll finish that and we'll practice some questions and then do review of a little bit of review of the important concepts, and then we'll actually take the quiz inshallah, and then we'll head off to our spring break inshallah. So let's start. The next set of substantive procedures relate to presentation and disclosure. So we discussed the transactions, we discussed the balances, and now we're off to the presentation and disclosure. The first assertion is occurrence and rights and obligations, where we have to inquire about accruals to ensure that they are properly disclosed. Now here we want to focus on items that the client's contract with the employees have. So the contracts will show that the client has payables to the employees when they retire, and certain other benefits that are payable in case there is an accident or some incidents that might happen to the employee's disability and things like that. So those payables are recorded based on the contracts the employees have with the client. We want to make sure that we ask them about those accruals, about those payables, and we want to make sure that they're properly disclosed. You cannot write about them in the financial statements, in the balance sheet or the income statement. So these have to be disclosed in the footnote disclosures, where the details of these retirement plans and contracts and so forth are specified. So we want to ask about those, and we want to make sure that those are disclosed. The next is completeness. And again, these relate to the presentation and the disclosure. So we want to complete what we call a financial reporting checklist to ensure that all financial statement disclosures related to payroll expense have been made. Now, depending on where you are auditing, you would have a different type of checklist. So for example, if you're auditing a company that conducts business in the US, then you would have multiple different types of payroll taxes that you have to check, multiple different types of employee related obligations such as Social Security, Medicare, workers' compensation. So these are examples. You don't necessarily have to know what these things mean, but the checklist would tell you, if you're auditing, the checklist would tell you that you need to check these items and make sure that they have been properly disclosed. And this, again, you cannot learn about them as a student. You will learn when you start working, but there is a checklist that you have to go through, and you will be trained on how to check each item. So as an auditor, you have to complete the checklist to make sure that you have checked each one of these items for proper disclosure. Okay? Are you following? Are you with me? Okay, very good. Next, we have classification and understandability. Review accrued payroll liabilities for proper short-term and long-term classification. The salaries payable and many of the taxes payable are short-term, so you have to pay them within 12 months, within 1 month actually, most of the time. So you want to make sure that those are disclosed in the short term when they are classified under the short-term liabilities, and the things that are long-term, for example, things that you have to pay the employee when they retire, those are listed in the long-term payable. Next, you want to look at accuracy and valuation. And again, there is a repeat. There is an overlap between checking accuracy and valuation, as well as occurrence, rights, and obligations. Here, what we have to do is review the benefit contracts for proper disclosure of pension and post-retirement benefits. Now, in every audit, there are accountants, there are auditors that are experts in the employee benefits. When I was working, there was an office in our firm. We had multiple locations, but there was one location where there were employee benefit experts. So you can actually go through certifications on employee benefits to learn the different types of benefits and retirement plans and contributions to those retirement plans, and what is taxable and what is not taxable. It's a whole host of items. So those accountants who are knowledgeable and qualified to look at these benefit contracts, among the auditors in your group, there would be somebody or more than one person who knows the details, an expert. They would review and make sure that everything that is supposed to be disclosed is disclosed, and it's accurate, and the valuation, the amount, is correct. Many things, for example, have to be calculated based on formulas and economic conditions and predictions of economic conditions, etc., etc. Those things are adjusted periodically. So I'm sure there has been adjustment because of the COVID-19 and the number of people that are dying because of COVID-19. So, for example, somebody who's been working for the client for 10 years is scheduled to retire after 10 years, and their life expectancy is another 20 years after they retire. So the client would have to pay them for those 20 years post-retirement. So you have to calculate what is the value of the payment the client would have to pay. So based on that, you have to disclose that. You have to write in the footnote disclosure. The client should write in the footnote disclosure that we have this many employees who will retire after 10 years, and then we have to pay them this much money for 20 years. All of these things based on different calculations. And add to that, the employees have an option to take a lump sum when they retire, as opposed to taking a particular amount for the next 20 years. So for example, let's say somebody who's aged 65 is retiring today in 2021. They would be given an offer to take, let's say, $2,000 a month for the next 20 years, or they could take, let's say, $100,000 right now, or $150,000 right now, and they would not get the monthly payments anymore. So again, depending on what they will choose, the liability is different for the client. So you can understand, I'm just giving you an example. You don't have to necessarily remember this, but you can understand the complication of the calculation, right? Are you following? This complication, the calculation could be very complicated. Do you follow? Are you following? Okay. So somebody who's an expert in this type of calculations would look at and make sure that the value of the disclosure, right, is accurate. And then also reading footnotes and other information to ensure that the information is accurate and properly presented at the appropriate amounts. So again, going through the footnotes to make sure that the information that they're supposed to disclose is disclosed and it is easily understandable. All right. So that brings us to the end of chapter 12. So what we want to do is go through a few questions to see your understanding. So let's try this first one. Answer this question using the poll. So we have 5 students who said test reasonableness, 1 says to detect fraud, and 3 said both. Substantive procedures, you must understand, cannot do anything other than test reasonableness. We are not going to be able to find anything specific. Make sure you understand this. The substantive procedure, the substantive analytical procedure is looking at some ratios and comparing them with the industry and with the prior year, and looking at some numbers and compare them with the industry and prior year, some balances and some transaction amounts. Okay, we did that a little bit in our last class. Okay, so make sure you understand substantive analytical procedure is not a specific test. It tests reasonableness. All right, is that clear? Make sure you understand the difference between substantive analytical procedure and substantive procedure. Is that clear? Don't mix up the two. All right, any doubt about what substantive analytical procedures are? Right? You cannot detect fraud with them. You cannot detect anything with them specific. It just raises a question in your mind. Is this correct? Is there anything wrong? Right? The payroll was 25% of sales last year. This year it's only 18%. Is there anything wrong? Industry average is 24%. Is there anything wrong? Right? That's the only thing you can get from the substantive analytical procedure. Well, if it was substantive procedure, you don't test reasonableness with substantive procedure. You find misstatements with substantive procedure. So don't mix the two. The purpose of substantive procedure is to say whether the account is fairly stated or not. Substantive procedure is done for each account, each balance. Substantive analytical procedure is the overall financial statement. Are you following? Substantive procedure you do for every management assertion, for every business process, individual transactions. Look at sales order, shipping document, receiving report. Are you following? Right. So testing reasonableness has nothing to do with the substantive procedure. Substantive procedures is going deeper into individual transactions. Substantive analytical procedure is looking at the big picture. Have no doubt about, don't mix the two. The purpose of the two are not the same. We don't do anything to detect fraud. The process of auditing does not is not designed to detect fraud. Now, if something sounds, if it surfaces, if the fraud surfaces, then you have procedures to do. But otherwise, you are not looking for fraud. You're looking for the material misstatements. Is that clear? Next question. So most people said false, and that is correct. The occurrence and completeness are totally opposite. Occurrence is the management's guarantee that everything that is recorded happened. Completeness is the guarantee that everything that happened was recorded. Okay, so you cannot replace, they're totally opposite of each other. You cannot replace one with the other. Is that clear? Any doubt about this? Okay, next one. So we have a divide half and half. Rights and obligations is an important assertion for liabilities because the company under audit may record fictitious liabilities. The company will not record fictitious liabilities. The company should not record expenses and liabilities that did not happen. Okay, are you following? So rights and obligations are more important when you do accounts receivable and assets. Nobody records an obligation that does not belong to them. Nobody records over record payments, so we don't have to worry about that much. Okay, so this very question also answers your concern, Sharat. Are you following? There is a question like this in the exam, and rights and obligations are more important for accounts receivable. You will find accounts receivable that are not actual receivables. They may not collect on them, but the payables are a negative thing, and you're not going to find the client is careful about not recording them, right? That is correct. Obligation does go with liabilities, and the concern of having obligations recorded that actually does not exist is rare. Okay, you're not going to find them recording payables and no loans and things like that. So the management assertion is the same, rights and obligations. The rights apply when you're looking at assets, and the obligations apply when you're looking at liabilities. This assertion is more important when you're looking at the assets, the accounts receivable, for example. For the liabilities, fictitious liabilities, meaning recording liabilities that do not exist, is not something really that you have to worry about. Is that clear? So the answer to this question is false. Are you following? Of course it's possible. Anything is possible. But remember, you want to catch the big fish when you're doing the audit. You don't want to worry about everything. You cannot worry about everything, right? That doesn't mean that you never do the testing of the obligations, but it's not as important as when you do the assets. Is that clear? Very good. Okay, so just a quick refresher on the key concepts and we'll go to the quiz. Management assertions are guarantees from the management of the client. How many times do you test them? How many times do you test the management assertions? You test the management assertion when you do the test of. Is that the first time you do those? Is this the first time you test the management assertions when you test the details? Controls. First time you test them when you do the test of controls. The second time you test them when you do the test of details. Okay? Remember this. Make sure you know management assertions, what management assertions are. When you're asked in the interview about management assertions, don't appear to be someone who's listening to a foreign language. Don't, act like you have no idea what it is. The interviewer will say, Qatar University, right? Who was your teacher again? Make sure you answer with confidence while you know what it is and when you test them. You test them when you do the test of controls. And you test them when you do the test of details. And when you tell them clearly and loudly your understanding, they're going to say, wow, that is very good. Qatar University, outstanding. Who was your teacher? Make sure you tell them who he was and then send me an email. Okay? Don't let me down. All right? Don't let me down. Make me proud when you go out there, inshallah. Inherent risk. Can the client or the auditor do anything about the inherent risk? Can they change anything about the inherent risk? No. You have to know what the inherent risks are and then set the inherent risk level. The test of controls is done to see the environment at the client. The controls ensure three things: true and fair financial statements, effective and efficient operations, and compliance. If you have good test of controls, what happens to the control risk? If the controls are good, what happens to the control risk? Is it high or low? If the client has good controls to ensure the control risk is low. If the control risk is low, do you have to do a lot of substantive procedures or can you do a little bit less? If the control risk is low, the amount of substantive procedures, you can do less. You can do, or it depends on how less you can do. It could be slightly less, it could be a lot less, okay? Depending on how the control is. So there are levels of controls. So if you do have low control risk, what happens to the detection risk? What happens to the detection risk through calculation? The detection risk goes up, okay? So control risk and inherent risk, when they're low, the detection risk could be high, which means you can do less in substantive procedure. Before you do the substantive procedure, you do substantive analytical procedure. Substantive analytical procedure, as we discussed, is to test the reasonableness. It is not a specific test. Once you have done that, you jump into the substantive procedures, which is the audit. Substantive procedure is the audit, and substantive procedure decides what your opinion is going to be. We don't say low substantive procedure. We say less, right? Less, which means you can take smaller samples. You can also perhaps skip some minor procedures, okay? So it could be both. All right? It could be both. Procedures, not assertions. Procedures. So for example, we discussed when we were doing confirmation of accounts receivable. We said that confirmation of accounts receivable is done almost all the time, except in certain exceptions where other procedures could lead to your confidence about the accounts receivable, or if the control environment is very good. Okay, so you would test the assertion, but you could skip a procedure, right? You still go through the documents and make sure the accounts receivable is correct, but you could skip the confirmation, for example. Very, very rare. This is not done except occasionally, but you could skip the procedure. Do you follow what I'm saying? Right? So you make sure you understand the distinction. You can do multiple procedures for testing one assertion. You can inquire, you can observe, you can go through documents, you can ask a third party. So you can skip one of these if you feel the controls are good. Is that clear? All right. Very good. So are there any questions for me? The quiz password is 5,000, and I will see you after the break, inshallah. Have a good break. Get some rest. Assalamu alaikum wa rahmatullahi wa barakatuh.